Hey, good morning, guys. It's Armand from Cool Trading Tools here. So today we're going to go over a couple things. We're going to go over the market and then kind of the plan on what I think is going on since the Fed meeting a couple days ago. Then I want to go over a lesson on ATR percentage, which is something, if anybody's watched the videos I've been recording, is something I talk about quite a bit, but I'm not sure if I've ever really gone into depth and broken down why I use it and how I use it and what the benefit is of it and why I'm so high on it. So let's get started here. Let's just start with the NASDAQ, right? So a couple days ago, the Federal Reserve had held interest rates at the same price. They did sound a little bit hawkish, like maybe they're going to raise them at some point, but not much to say beyond that about it. So the market now, a lot of times too, is the initial day, right? It's so, you know, pushed, then had a big sell off at the end of the day and looked ugly. But then ultimately, pre market this day right here, just grinded up all day. And then yesterday, buying continued throughout the day and held up the entire day. So a lot of times too, the delayed reaction on the Fed meeting is more important once like institutions and larger players have had time to digest that and decide how they want to position. So a lot of times the coming days is more important than the day of the Fed meeting for what does that mean for us long term. So, what does that mean, right? So, right now we had a pretty good bounce since that day, and really the weekly candle is holding its 20 SMA, and if it holds up today, is shaping up to be a pretty strong weekly candle that to me would indicate potential for a multi-week bounce, right? So, I think that it's looking good so far. As for today, what is the plan here? So I think it's important to remember that the daily trend is still down. So I think I'm still kind of going to be bearish until we switch the daily trend to the upside. So usually when we're in a downtrending stock or market, 3 days up or three strong days up is when you kind of want to look to short. So I'm not sure entirely if today's a great day. The one reason I'm potentially still looking bearish today is because we are gapping up right into, what I would consider previous support, potential resistance now, and now it's supply. Um, but we have two problems with that, I would say. One is we have a fundamental narrative driving this bounce with the Fed meeting a couple days ago. There's a fundamental aspect behind it. And then two, the fact that this is only day two of the bounce. Even if it is a large bounce, we're still only on day two. So it makes things a little bit tricky. I do think for a multi-week bounce where if we can hold up today, it still looks good. It might be a day where you sit on your hands a little bit. I think maybe a short off the open is what I'd be looking for, or another push higher. I do think, like I said, I do think we are gapping up into what would be likely supply, and we're in a downtrending market. And until what would we need to see to change that is the longer the bounce happens, the better we're going to be. So that if we can bounce up and push a little higher, what that does for changing the daily downtrend to a daily uptrend, is it gives us more room to push lower, find an area to base, and then move back higher to set a daily higher low relative to this level here, right? So I think that's kind of what we're looking for. I think it wouldn't be surprising if we go either direction today. I mean, we're gapping up, and it does put us in a tough spot, right? I think the short term, it does kind of look bullish. We're rounding up the Fed narrative, had a pretty big sell off, and we're gapping up now. However, it's the same as like when people are trying to short the dips into this area, right? We're in an uptrend. So everybody who's trying to short, once you're running into the EMAs, is getting smoked. And now we're running into the EMAs, 9 EMA, 20 SMAs coming up. I still think you just got to kind of have a bearish lean until we prove the trend otherwise. So I'm going to be keeping that in mind here. I'm not sure anything's a super obvious trade today, right? So just something to think about from that perspective. I'm still pretty much focused on Soxel here, which has just been an amazing trader this year. It's my best stock on the year by far. And it's very interesting because I've never had that for a 2x or a 3x ETF. And I've kind of also talked about this quite a bit in the past few weeks, that this has kind of been my main focus. And I thought that'd be a good thing since I'm not entirely too strong bias on anything today for trading wise. I'll just kind of see how things play off once we get to the open and see if there's any volatility that I'd like to play into, but nothing huge idea. I thought I would give a lesson on a topic that I talk about called ATR percentage and how I use it. So really, for my strategy, I think the way I look at edge in the markets is I think there's two types of edge that I particularly use. There's having a directional edge on the direction that the market's going to move, and then there's having a volatility edge. And personally, I lean towards volatility. I day trade primarily most of my trades. So volatility becomes the more important one for me. And I think it's just the better edge in general. I think it's easier. So let's kind of break down both. So let's just go quickly directional edge. Directional edge is like maybe that the volatility is not great. You're not going to get some big wins off of it. But for example, having an edge where everything's aligned, right? So like here's XLF, right? This is the banking stock sector. It's in an uptrend. It's above its moving averages. Likely it's going higher. So if you go look at stocks like JP Morgan, uptrending, let's see, Wells Fargo, or let's try Citigroup. These are all in uptrending environments right now, right? And so what it is your market is up, your sector is up, and then your individual stock is up, and that's kind of a directional edge. Now the problem with banking stocks is they are super low volatility, right? This thing only moves 70 cents a day versus you go Soxal is moving $21 a day. So I have kind of a rule of thumb though on what I'm looking for in volatility as a day trader that I came up with called ATR percentage, right? So let's just look at XLF here, right? So, and I like to keep if I'm going to day trade something, right? I'd like it to be a minimum of 3% of its ATR, right? So right now the ATR on XLF is 70 cents, right, on a $57 stock. So you can find that by 70 cents divided by 57 gives you 1.12%. So it's 1%, right? A little over 1% ATR. Versus Soxal is giving a 21 ATR on a $128 stock. So let's do 21 divided by 28, or excuse me, 128, that's going to give you a 16% ATR. So if you remember, I said my minimum threshold is if I'm willing to day trade a stock, absolute minimum is 3%. So that means if it's $100 stock times if it's $100 stock, it needs to be having an ATR minimum of $3 per day, right? So for Soxal, if I was going to day trade that, I would need 128 times 0.03. I would need it to move a minimum of $3.84 per day on ATR. Right now, you can see right here, the ATR is 2141. So it's about 7 times almost what it is. So that's why it's been such an amazing trader. It's first off, it's giving directional edge and it's giving this amazing volatility. Anything over 10% ATR, so like $100 stock moving $10 a day, is giving great volatility for day traders. Soxal is giving 16% right now, and it's got a combination of both the directional downtrend. So like here would be like this area right here, volatility is in play, but there's no directional edge. Here, directional, but not enough volatility. Now, when we're in the downside, we're getting an increase in ATR. The volatility is there, and the directional edge is there. So I know I kind of hopefully it's understanding, but essentially I'll use that as a gauge on, is this a stock I'm even interested in day trading? So I'll start with, like I said, a minimum of 3%. If it doesn't at least meet that, it's eliminated. Ideally, I'm really looking for something like 7 or 8%. You get 10% or higher, you're in a really great trader. And so I just wanted to use that as an example. If you're a day trader, that's a really great gauge that even if you're not a skilled day trader, so then it becomes like there's a lot of volatility, right? But then it becomes, can you actually execute it on the smaller time frames to get in? And the whole reason is for that is like if you can execute in the correct areas based on like the daily chart plan, that allows for the stock to move in large movements in your direction, which gives you a big risk reward then in that situation, right? And what this does for two things, if you're a crappy trader and you're not very good at execution, if you're trading volatility and you're using your stops, obviously, you have stops in place, you might even be breaking even then because even if you're not a very good skilled trader, the payoff on trading high volatility stocks, when you do occasionally get a winner, is going to pay for those losers. I only have a 34% win percentage, but 3R, 4R on most trades is going to cover those losses. So even if you're not a skilled trader, trading stocks with high volatility, and you can visually look at it, but I think just if you need like some people like to have like an actual just gauge, that ATR percentage is a real good gauge for day traders on should they even be thinking about trading this stock. Okay, yes, the volatility is there. Now we can incorporate, do I have a directional edge? Is there any of this? How am I going to get in? What's the trend, etc., like that. So just want to make a little video on that. Hope it's helpful. If there's any questions, please feel free to ask. Otherwise, have a great trading day into the weekend here.